Are you investing in multifamily properties in Reading, Pennsylvania? And if you are you aware of the rental market and what's happening with the rent trends on a quarter over quarter basis and not a year over year basis? Because what I've got to tell you may surprise you. I'm David Monroe, CCIM, and I'm a CCIM instructor for the CCIM Institute, and I specialize in market analysis. And in this series, we talk about the MSA rental market trends that are occurring all over the country. So in this video, we're going to be doing the multifamily rental market for Reading, Pennsylvania. So in the last video I did yesterday, when I did the US, I asked for comments on what MSAs you would like me to analyze. And the very first comment that came up was for Reading, Pennsylvania. Tomorrow, I will be doing St. Louis, Missouri. But in the meantime, let's look at Reading, Pennsylvania. So you can see on your screen that we have the MSA drawn out by CoStar of Reading, Pennsylvania. There are 364 properties in this market. If we go to analytics and wait for analytics to populate, we can see there are 11,669 units. There are 100 units under construction. And in the last 12 months, 76 people have actually moved out of the market, or I should say 76 more people moved out than moved in. Now, we don't know how many actually moved in and how many actually moved out. All we know is over the last 12 months, the net result was 76 more people left than what entered. And they could have left the marketplace completely, or they could have bought single family homes. We don't know the answer to that question, so that the data does not tell us that. We can see that Reading, Pennsylvania has a very low multifamily vacancy rate, and this is all asset classes A, B, and C. We will individually bring them out here shortly. Let's look at everything first. That the rents have increased year over year, and I have not looked at this, so we'll see if they will continue that increase quarter over quarter, or if, like most markets, there has been a decline over the last quarter or two. We can see that sale price per unit is still up, and now we are seeing an increase in market cap rate. This is the first we've seen an increase in quite some time. Now, this is only the second video in this series, but I've been analyzing about 20 plus markets at this point over the last couple of weeks. This is the first increase in cap rate that I've seen on a year over year basis. Okay, so let's go into the data and see what the data shows us. So we can see on a quarterly basis, we're looking at all beds, all history. We're ignoring the Q1 quarter to date because, as I said in the last video, we're only in week 2 of the first quarter of 2023, and there just is not enough data to support this. So this would be erroneous information, right? We can see that coming out of 2022 Q4, it was at $1,221 per unit on average. It increased to $1,241, increased to $1,267, and at that point, the market said, we've had enough. It went down to $1,262, up to $1,270, and now it's showing a trend back to $1,267, but again, that's erroneous. So we're kind of seeing a fluctuation here, which is the first time I've seen this in any of the markets we've analyzed, where the rent started to go down, but then came back up again, especially that much, a full penny per square foot or $8 per unit. So let's see if we can look at our trends for construction and deliveries. So we've had no deliveries. We only have 100 units under construction. So it looks like in 2018, 2019, 82 units went under construction in this market. They since delivered in the third or second quarter of 2022. And they quickly absorbed. They continued to absorb until the second quarter or the fourth quarter of 2021, at which point people started moving out of this market. My guess is because of the pricing and the rents going so high that you've gone beyond the median household income. Now, without going and looking at median household income, we don't know if that is true or not. All we can see is that there is definitely an exit occurring in the Reading, Pennsylvania marketplace across all asset classes. Now let's look at it at each individual asset class. We'll start with the Class C market and work our way to Class A's. Actually, we'll start with Class A because that's where most of our under construction is probably going to be. So we'll look there first. And we can see that in the Class A market, again, we'll always look at effective rent. We increased from Q1 to Q2, then we decreased from Q2 to Q3, increased to Q4. Again, not going to look at quarter to date, but it is telling us that be prepared. We're going to have a pretty big decrease if it stays that way coming in, but that's erroneous data right now. We can't count it. But we, again, are seeing that fluctuation in the Class A. Let's go over here and see, okay, so the units that are under construction are not in the Class A space, and the Class A has seen very little negative absorption, about 50% more left than showed up. So you actually ended up with -3. So if you had 3 added, 6 left, that gives us a total result of -3 for the year. If we come back over here, we only have 1,049 units in the market of Class A space. So that tells us that our problem is probably sitting in the B class. So let's go look at the B class. Go back to filters, scroll down, get rid of the A, and add B class and see what that looks like. So we can see that the data has populated. It was at 1239. Again, effective rent. Let's get rid of the filters. 1239 Q1 went up to 1254, slightly down to 1252, back up to 1262, and it's kind of stabilizing here. So let's look at our construction data. So yes, they are saying that there is 100 units of what's going to be Class B under construction, and that 25 people left the market in 2022 and 11 people entered the market. So we have -14 absorption here. So the -14 here and the -3 in the Class A space, we're at -17 absorption. So it looks like the Class C's appear to be our problem in this market. We can see that occupancy was 98.6 at the beginning of the year and finished at 98.3. So the vacancy is increasing in the Class B space, albeit at a very slow rate in Reading, Pennsylvania. So now let's go look at the Class C market and see what it shows. So scroll down, put in the C's, get rid of the B's, and let's see what we display this time. All right, so as this populates, let's get rid of our filters, back to effective rent. So we're at 1170 Q1, 1199 Q2, so increase, decrease, very slight increase in the Class C market. All right, these are pretty high rents for Class C, but it is Pennsylvania. So let's go over and look at our absorption, and we can see that the negative absorption is happening in the Class C space. So that is saying to me, because they're not moving to the B's, because the B was negative absorption. They're not moving to the A's, because A's was negative absorption. So the Class C market is saying in Reading, Pennsylvania, we cannot afford these rents. So we are going somewhere else, whether they're buying homes or whether they're renting outside the market or whether they're doubling up or tripling up so that they can afford the rents. The majority of our negative absorption or the people leaving the market, the rental market, is happening in the Class C space. Okay, so it's not always the Class A's. In this case, it was the Class C's. So that does it for this video. I really hope this was helpful to you. Please don't forget to subscribe to this channel and ring the little bell so every time one of these new videos comes out, you get notified that it has been released. Again, I'm going to try to do them every day. Sometimes I will not be able to do them every day, but we will try. There should be at least 3 or 4 a week so that we can get through the majority of the markets by the end of this year. So again, I hope this was helpful, and we'll see you in the next market.